Well, the improved economic growth prospects that we've had being announced surrounding Kenya's economy, certainly encouraging investors' optimism about the market clawing back losses on the equity front. What impact is this having volume-wise on the bourse and the level of activity you're seeing on the Kenyan markets at the moment?
I completely agree with your first comment about, I think consensus is too low in 2010 about economic growth. I think GDP is going to surprise to the upside. I think a lot of it is to do with meteorology. We've had some really optimal rains. I was driving around the countryside a little bit over the weekend. It's extremely green and you can feel the prosperity cascading lower, especially in the rural areas. I'm looking for GDP between 4.5% and 5% this year. I think market consensus was just upgraded to about 4, just over 4. This is obviously some very powerful headwinds which are allowing our stock market to improve considerably. I think the issue at the stock market is actually a lack of supply. This is a small market in the overall scheme of things. The actual free float of shares is not that great. So whilst we do get these lurches lower, we're in a very sweet spot and a trend higher. So I'm pretty bullish about the market. I think you're seeing players who are out of the game come back on the pitch, like the National Social Security Fund. The retail investors still lagging, but you know, we've got enough momentum here.
Let's take a look at a stock that, despite all of that, didn't perform too well last week. It was Kapuchura Tea, shaving off 15.7% by the close. It was topping the list of losers. And some have said, you know, that we're facing the possibility of an overheating on these tea players, where we've seen them run pretty hard of late, given the environment you've just highlighted. What do you see being the way forward for players like Kapuchura Tea?
I am supremely bullish on the tea stocks. I think they remain completely out of sync and in disequilibrium. I think we're finding a readjustment to equilibrium, which was this outstanding rally we had at the beginning of the year. We've just had a period of rotation and I expect further upside traction. The reason is we've had an absolute sweet spot for these tea companies. Production levels are up 60% in February, and we're at price points we haven't seen for many, many years. So I think people just do not comprehend that the prices will remain at these levels for the foreseeable future, and we are having a double slam dunk because we're getting all this production off. Kapuchura Tea is an interesting one to bring up because it is the highest beta tea stock. So when they get it right, they get it really right. It actually looks probably the cheapest tea stock at the Nairobi Stock Exchange. Having said all of that, there are not that many players in the tea market, so you do get these big moves which are just profit-taking related, and I think within a very strong bull trend.
A similar kind of explanation then for EGADS. I mean, it was last week's top gainer last week as well. I mean, it climbed 39.6%. That after it climbed already close on 60% the previous week. What's driving interest there?
It's up 200%, I think, in the last 6 weeks. I believe somebody took out 62% of the shares not so long ago, about 2 months back. And I think what you're seeing is a move to take it private, and the sharp acceleration higher is as the buyer looks to mop up any excess shares left over. Again, the attraction and the reason why someone took this 62% stake was because the breakup value of these tea companies is a multiple of the current share price. In most cases, you're looking at between 5x and 10x if you were able to buy all these tea companies right now, get all the supply and break them up, probably sell them for real estate in part.
Well, certainly an interesting playing field that we're faced with there. In terms of other valuations, I mean, where are valuations still looking attractive, Aly-Khan? Because we've seen, albeit a slow and steady rise on the NSE All Share Index, quite a remarkable rise on the All Share this year so far.
Yes, I think there's still plenty to go for. Obviously, you've got to be more alert on the stock picking side. The broad-based rally when everything went up, I think, is probably running out of steam a little. But, you know, there's plenty of good value. Jubilee Holdings reported results today, plus 24%. This is trading at a P of less than 10. The balance sheet has enormous amount of juice in it because they never mark anything to market. They carry everything at cost. So there is a lot of value at the NSE, and I think there's a rising tide of liquidity, both of which tell me that prices still remain on an upward trend.